The phone vibrates at 11:47 p.m. A tenant says the hot water stopped working. Outside, it's freezing. The landlord is already half awake before he even answers. He grabs a hoodie, opens notes on his phone, starts calculating. Can this wait until morning? How much will the repair cost? Will the tenant get angry? Will this become another problem? Meanwhile, somewhere else, another man is sitting in an airport terminal. His laptop is closed. His investments moved thousands of dollars that week while he was asleep. Eating dinner, walking through another city, barely thinking about them at all. No emergency calls. No leaking pipes. No broken appliances. No sudden decisions demanding his attention. Both men are building wealth. Both are technically investing. Both might even end up millionaires. But only one of them truly owns his time. And that's the part almost nobody talks about. Because most people think they're choosing between stocks and real estate. But they're not. They're choosing between two completely different lifestyles disguised as investments. My name is Theo, and I spend a lot of time thinking about the hidden lifestyle costs behind financial decisions. Because the internet loves talking about returns, cash flow versus appreciation, leverage versus index funds, passive income versus compound growth. But almost nobody talks about the invisible price of owning certain assets, the mental bandwidth, the emotional drag, the attention drain, the low-grade stress that quietly follows you everywhere. And if you're someone trying to build wealth without accidentally building a life that constantly exhausts you, hit like and subscribe if this video helps you think differently about money. Because the older I get, the less I believe investing is only about maximizing returns. I think it's also about protecting your energy, and that changes everything. Real estate is emotionally convincing in a way stocks will never be. You can see it, touch it, walk through it, paint the walls, renovate the kitchen. Stand outside and think, I own this. That feeling is powerful. Especially in a world where most wealth feels invisible and digital, a rental property feels real. Monthly rent payments feel productive. Leverage feels exciting. And socially, real estate often looks impressive. People hear investment property and immediately assume seriousness, responsibility, financial intelligence, discipline. There's something psychologically satisfying about owning physical assets. You feel involved, active, in control. And honestly, for certain personalities, that feeling matters. Some people enjoy the game of real estate. They like negotiations, they like renovations. They like optimizing properties. They like turning ugly houses into profitable assets. For them, it feels energizing. But many people don't realize something important until much later. Real estate is not passive in the way social media makes it sound. It is responsibility wearing the costume of investing. Because the moment you buy the property, the asset begins demanding attention. Tenants, repairs, insurance, property taxes, unexpected maintenance, legal paperwork, vacancy risk, noise complaints, contractors disappearing halfway through projects, water damage, roofs, air conditioning systems, plumbing, and worst of all, unpredictability. That's the hidden tax. Not just money. Unpredictability, because unpredictability consumes mental energy in a way spreadsheets never fully capture. A stock portfolio does not call you during dinner. An index fund does not wake you up at midnight. The S&P 500 does not ask you to find an emergency electrician on a Sunday. But real estate often does. And over time, many investors slowly realize something uncomfortable. They didn't just buy an asset. They bought additional responsibility. And responsibility has weight. Especially if your real life is already full. A demanding career, children, a business, health problems, travel, creative work, mental fatigue. This is why two investments with similar returns can create completely different lives. Because ROI is not the only thing compounding. Stress compounds too. Attention fragmentation compounds too. Decision fatigue compounds too. And the strange thing about real estate is that it often rewards the exact personality traits that can quietly trap people. People who feel uncomfortable being idle. People who want to feel productive all the time. People who associate effort with value. Real estate gives constant opportunities to work on wealth, to improve something, fix something, optimize something, monitor something. And psychologically, that can feel addictive. You feel financially engaged. You feel serious, you feel proactive. But there's another side to this conversation that almost sounds boring by comparison. Stocks, especially index investing, Because index investing is deeply unimpressive emotionally. There's no building to walk through, no renovation reveal, no tenants thanking you, no dramatic before and after photos. Most of the time, nothing happens. You automate contributions, you wait. The portfolio quietly compounds in the background. And because the growth is invisible day to day, many people underestimate how powerful it really is. The irony is that the best investing strategy often feels emotionally unsatisfying. Because most of the work is happening invisibly. No adrenaline, no constant activity. No sense of doing something, just quiet compounding. Which sounds simple until the market crashes 30%. Then suddenly, passive investing becomes emotionally difficult in a completely different way. Because stocks demand emotional restraint instead of operational effort, and that's harder than people think. Real estate tests your ability to handle responsibility. Stocks test your ability to handle uncertainty. One drains your time, the other attacks your emotions. And many people fail at index investing, not because the strategy is bad, but because boredom makes them sabotage it. They panic sell, performance chase, constantly switch strategies, obsess over headlines, treat long-term investing like entertainment, which completely destroys the advantage. Because index investing only works when you allow time to do most of the labor. And humans hate waiting quietly while nothing visible seems to happen. That's why real estate often feels richer earlier. You can see movement. Cash flow arrives monthly. The asset feels alive. Meanwhile, index funds can feel emotionally dead for years. But the hidden power of stocks is scalability. You can deploy enormous amounts of capital without dramatically increasing your life complexity. That matters more than people realize, especially later in life. Because eventually, investing stops being purely mathematical. It becomes energetic. What kind of life does this asset require from me? That question changes everything. Imagine two investors both earning an extra $20,000 a year. On paper, they look similar. But one investor spends weekends managing contractors, takes calls during vacations, feels subtle anxiety every time a tenant's lease expires, cannot move cities easily, cannot travel freely for long periods, constantly monitors expenses and maintenance schedules. The other investor spends maybe 2 hours a month reviewing a portfolio. Which investor actually has the higher return? This is where most financial advice completely breaks down. Because traditional ROI calculations ignore lifestyle friction. They ignore stress. They ignore flexibility. They ignore cognitive load. They ignore interrupted evenings. They ignore emotional exhaustion. And maybe most importantly, they ignore freedom. So, I started thinking about investing differently. Not just return on investment, but freedom-adjusted return. How much life energy does this asset consume relative to what it produces? Because if an investment generates strong cash flow while quietly shrinking your flexibility, peace, mobility, and attention, the real return may not be as high as it appears. And once you start viewing investments through that lens, something fascinating happens. You begin understanding why many wealthy people gradually move towards simpler assets as their lives become busier. Not because they suddenly became lazy, because their priorities changed. When you're younger and trying to build momentum, you often trade time for upside willingly. You'll grind, manage properties, learn leverage, handle chaos. But eventually, for many high performers, money stops being the scarcest resource. Time becomes scarce. Focus becomes scarce. Attention becomes scarce. Deep, uninterrupted thinking becomes scarce. And once that shift happens, investments that consume less mental bandwidth become dramatically more valuable. This is why so many entrepreneurs, executives, creators, surgeons, attorneys, and high-income professionals eventually prefer scalable investing systems. Not because real estate stopped working, because their attention became too valuable. A founder running a company may not want 20 unpredictable property-related decisions interrupting his week. A creator may not want location dependence. An executive may prioritize simplicity over optimization. At some point, maximizing life becomes more important than maximizing complexity-adjusted yield. And that's a conversation financial culture rarely has honestly. Because hustle culture romanticizes involvement, constant action, constant optimization, constant management. But involvement itself has a cost, a hidden one. And sometimes an investment becomes expensive the moment it consumes more life than it creates. That doesn't mean stocks are automatically superior, far from it. Because real estate becomes extraordinary under the right conditions, especially when approached as a true business, not as fantasy passive income. The people who dominate in real estate usually have something specific: operator mentality, systems thinking, process discipline, market knowledge, patience, negotiation skill, and the ability to build infrastructure around the asset. They hire property managers, build teams, optimize financing, understand taxes, use leverage strategically, create repeatable systems. For them, real estate is not an investment. It's an ecosystem, a machine. And that's why some people become incredibly wealthy through it. Not because they bought one random rental property. Because they intentionally built a business. There's a huge difference. And honestly, this is where many beginners get trapped psychologically. They think they're buying passive income. But what they're actually buying is a small business they don't yet know how to operate. That mismatch creates enormous frustration. Especially when social media keeps selling the fantasy version. The smiling landlord collecting checks on a beach. The financial freedom screenshots. The effortless cash flow. Very few people film the stress, the disputes, the debt pressure, the uncertainty. The years where nothing goes according to plan. Meanwhile, stock investing has the opposite branding problem. It looks boring because it often is boring. No dramatic transformation story. No flashy renovation content. No exciting negotiation scenes. Just decades of disciplined invisibility, but boring scales beautifully. And one of the strangest truths about wealth is this: the systems most compatible with long-term consistency often look emotionally unimpressive in the short term. That's why so many people abandon them too early. They confuse stimulation with effectiveness. But wealth creation is not always supposed to feel exciting. Sometimes the best investments are the ones that leave your life alone. The ones quietly working while your attention stays available for relationships, health, creativity, family, travel, thinking, building, resting, or simply existing without constant operational pressure. And I think that's the real conversation hidden underneath stocks versus real estate. Not which one has the highest theoretical return, but which one aligns with the kind of life you actually want to sustain for decades. Because eventually, every investment starts charging you in something: time, energy, stress, flexibility, attention, peace, and mature investing is learning to notice those invisible costs before they quietly reshape your entire lifestyle. Some people genuinely thrive in real estate. They love building systems. They enjoy leverage. They enjoy active involvement. They enjoy operating businesses tied to physical assets. And for them, real estate can become extraordinary. Not just financially, psychologically, but others are secretly trying to build freedom while choosing investments that continuously increase obligation. And those goals eventually collide. That's why I no longer think the smartest investors are simply the ones earning the highest returns. I think they're the ones designing a financial life they can continue living without burning themselves out. Because wealth that constantly exhausts you carries a hidden form of poverty inside it. And over long enough time horizons, sustainability matters more than intensity. Very few people become wealthy through one perfect decision. Most become wealthy through systems they can emotionally maintain for decades. That's the real game. Not maximizing excitement, not maximizing status, not maximizing complexity. Maximizing durability. Because the investment that quietly allows you to keep living your life without constantly reclaiming your attention may ultimately outperform the one demanding to become your entire identity. And maybe that's the real question people should ask before investing. Not, how much money could this make me? But, what kind of life will this require me to live? Because the investment that quietly gives you your time back may end up being the one that makes you truly wealthy. Thank you so much for watching this video, and don't forget to subscribe to see the latest videos. I wish you success.